Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 19th of August 2019, so welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, but specifically our JFD research page, where you can also go in and have a look at different analysis that we do on a daily basis. So yep, feel free to check us out, and I believe you can find a lot of useful stuff here. But right now, let's jump into the charts. Now the first one I want to touch on here is gold. Now I looked at gold last week basically, and on the 13th of August we saw this sharp decline here, and then it traveled below the 1490 level, one of our levels that I was telling you to keep an eye on, and you can see that the commodity quickly reversed back and traveled a little bit higher. So ended the week kind of nowhere, let's put it that way. It managed to reach the area near the 1535, but then, like I said, quickly sold off and traveled to the downside. So for now, what we could do here is we'll probably wait for a clear breakthrough one of our levels before kind of, let's say, examining any further directional move. Of course, overall, don't get me wrong, overall we're still within this uptrend. We could still see this one moving higher in the near term. The only thing is that from the very short term perspective, there could be a possibility for a slide, especially if it drops below the 1490 zone. So I'm not talking about already the psychological 1500 level, the 1490. If we start seeing it drop below this, then we'll start considering slightly lower areas. We will aim for the 1475, or even going further down towards the 200 EMA here, which could be around the 1456-55 zone, approximately around there. Let's say by the time it travels all the way lower here. So in a way, like I said, guys, for now, be very careful. Yes, overall, we are still within an uptrend, but from the shorter term perspective, I mean, there could be a possibility maybe to see this one sliding a little bit lower, but again, we will get comfortable with lower areas only if we see a move below the 1490 level. So keep your eyes on that one. In terms of the upside, well, it's pretty straightforward here. We need to see a clear break above the 1535, which is the highest point of last week, and only then we will aim for higher levels. But again, for now, we'll remain very cautious on this one. WTI Oil. Now, last week also had a nice push to the upside, managed to travel higher, and managed to test its this tentative downside resistance line. But to be honest, it's no longer a tentative one. We already have like 3 touches here. So you can see that the commodity pushed higher, tested this line, and then retraced back down, and is now currently sitting slightly below the 55.40 level, so approximately there. Now, in order to consider, let's say, further declines, because like I said, the current trend is more to the downside. Ideally, to be honest, we would like to see a drop below the 53.72, and I do understand that there's quite a big of a move here, but looking at this overall, I mean, to get more comfortable with lower areas, a drop below the 53.72-70 zone could do the trick here, and we could see this one sliding towards the 51.90 or even below that. But again, for now, be very careful on this one. Let me just quickly put an arrow here for our future reference. So this is what we're going to be looking at here in terms of the downside. In terms of the upside, well, of course, as you probably understand now, we need to see a break of this downside resistance line taken from the high from around the high of the 11th of July. And well, to be honest, ideally also in addition to that, just to confirm that those further up moves, a break of this little high, this high of last week near the 57.43 zone, a nice good break above this could open the path towards higher levels. We could aim for the 58.80 zone or even further up here, going further higher. But again, like I said, for now, let's keep it short and simple. For now, keep your eyes on this downside line. If it gets a nice good break, then we will aim for the 57.43. But if that fails to withhold, now this is where it could become a little bit more exciting, because this way the commodity would confirm a forthcoming higher high here on the shorter time frame, and we could then see this one traveling towards the 58.80 zone. So keep your eyes on that one. Jumping into a few pairs now very quickly. GBPUSD, it's quite an interesting one. Of course, I can see this morning it is trying to make its way higher again. Last week, this is what I was talking about last week, because yes, we could see this one pushing a little bit higher, but if it struggles, for example, to push, let's say, above the 100 EMA, then we could see another leg of selling here, potentially driving this one back towards the lows of the low of the 11th of August. Sorry, 11th of August. That was the Sunday candle. So around the low of last week. To be honest, this is going to be the low of last week near the 1.2013 zone. So in a way, guys, for now, be very careful with this one. Yeah, it is. It seems that it wants to move higher here, but let's see if it actually manages to break some of these key barriers here, because let's say for us to consider a slightly larger correction, and the reason why I'm saying a larger correction, because we are still within a downtrend. We're still trading below this downside resistance line taken from the high of the or should I say the highest point of May 2019. So a nice good pop above the 1.2210 could in a way open the path towards this downside line, but again, like I said, we will be very careful around it, because if it holds again, we could see another leg of selling. So for now, be very careful with the pound, because yes, it did get a boost last week, but again, I keep reminding everyone, do not forget that the Brexit issues have not disappeared anywhere. So we're just getting closer to the deadline. So yes, the pound is recovering somewhat, but I mean, it could turn out to be ugly later on for it. So that's why, guys, be very careful here. And for now, yes, keep an eye on the upside, but watch some of these key barriers, like initially the 100 EMA here on the 4-hour chart, and then the 1.2210 zone. So keep your eyes on that one. Jumping into EURUSD, here is a slightly different picture. So you can see that I've talked about this one last week, basically, and what I was saying, that still after breaking this this little range that it was trading in for quite a while, it traveled lower. I was targeting the 111 zone. I mean, it fell even further down, tested the 1.1068, also one of my levels that I talked about last week. And then what I was saying on Friday, that in a way, if we see this one reversing back up, if this downside, the resistance line continues to hold, this downside resistance line running from the high of the 13th of August, if it continues to hold, then we could see another leg of selling here. But looking at this current picture right now, probably I will suggest to be a little bit more on the cautious side, because you can see that yes, the downside line continues to hold, but even the pivot, today's pivot, continues to hold the rate from dropping lower. So that's why ideally now what we're going to do is, in order to be on the safe side, we'll wait for a drop below the 1.1068 and only then target further declines, because here in this situation, as I said, yes, on one hand, yes, it is trading below this downside resistance line, but on the other, the pair is struggling to move below its pivot, so today's pivot. So be very careful around here. If let's say we get a nice break here to the upside, and if we get a nice push above the 1.1106, something like that, and then yep, we might maybe consider a slightly higher move here. And let me just adjust some of these levels. because initially we will target this little area near the 1.1129, and then we'll take it from there. But still, for us to get slightly more excited about some of the higher levels, or at least some higher levels in the short run, well, we'll wait for a pushback above the 1.1163, and I do understand it's quite a big of a zone here to miss out on, but to be honest, like I said, it's better to be safe than sorry. So if we see a nice good pushback above the 1.1163, we'll start considering higher levels. Of course, ideally, we'd like to see a push above the 200 EMA here, but we'll be very careful around here. Like I said, for now, the pair is stuck below the downside line. If it continues to trade here like this, then for us to consider further declines, ideally we need to see a drop below the 1.1068 zone, so keep your eyes on that one. This leads us into another interesting pair, EURGBP. So last week it was the first week that the pair managed to close in the red, or in my situation here in the black. So basically, in other words, in the negative territory. There is a possibility to see this one continue moving lower. That said, yes, of course, you can see that now it's kind of it did what I was talking about. It did kind of correct a little bit back up. It failed to push above the 0.9150, and now it seems that it's willing to continue moving lower. Now we're still trading above this 200 EMA here on the 4-hour chart, so we could see, like I said, this one sliding further down, testing this 200 EMA, maybe even breaking this one. But one thing that I really want you to kind of remember is that kind of overall, if we look at this one slightly from the bigger picture, we can see that this is kind of still within this this uptrend in a way. So overall, it's kind of trading within this above this medium-term upside support line here. I do understand it's a bit of a tentative one, but nevertheless, we'll draw this one. We'll keep an eye on it. So in a way, we could see even EURGBP sliding further down here. But if it stays above this upside line, this is where it could become a little bit more interesting for the bulls again, and we could see this one reversing and pushing back up again. So again, like I said, keep your eyes on something like this. Of course, from the very short-term perspective, for now, keep your eyes on the 200 EMA. This is what we could test soon, probably. But if the selling doesn't end, and if we see a drop below the 0.9088 zone, approximately around here, which is the low of the 31st of July, and basically that's the area that got tested last week, a break below this would confirm a forthcoming lower low, and we could then, like I said, target these lower areas, the 0.9050, or even this upside support line. In order for us, let's say, to get slightly more comfortable with higher levels, well, what we could do here, and probably we need to get rid of this is no longer valid. What we're going to do here is we're going to wait for a pushback above the 0.9196 level here, marked by the high of the 15th of August, and intraday swing high of the 15th of August. And this way, a nice good push above this could, in a way, open the path towards slightly higher levels. We're not going to go drastically to the upside. We're just going to go step by step. We're going to be very careful on this one, but like I said, in terms of the upside, this is where we're going to be targeting, because in a way, if the pair moves above the 0.9196, it would also be above all of its EMAs here on the 4-hour chart, and in a way, this is what the bulls could see as a positive sign for them, and more of those buyers could start joining in here. So that's why, guys, be very careful here. Keep your eyes on these two levels, and let me just quickly highlight those for our future reference. So this is the first one that we're going to be keeping a close eye on, and this is the 0.9196. That's in terms of the upside. In terms of the downside, let me just adjust this arrow slightly. This is where we're going to be looking for a drop below the 0.9088. could in a way do the trick here for the bears, but only temporarily, because after that, like I said, we'll keep an eye on this upside support line. Let me just drag this highlighted area right here very quickly. So there we go. So this is what we will come back to when when we will have a look at your GBP again. And the last pair for this session will be the USD CAD. Now again, overall still trading within this nice uptrend, even though on Thursday it started sliding lower here, and for now, in a way, we could expect even a little bit more downside. But as long as it stays, as long as the rate stays above this upside support line, we will remain positive and continue targeting the upside in the near term. So in a way, something like this could be possible. There we go. Let me just quickly. Initially, we will, if we see a rebound here, initially we will target this 1.3345 level that the pair failed to reach last week, and this was basically the highest point of August so far. Of course, we still have a few days left. Excuse me, in August, and that's why, guys, for now we will be very careful here. Excuse me, guys, my voice is going down. So in order to, let's say, get comfortable with the downside here, ideally we would like to see a drop below the 1.32 zone, and only then aim for further declines. But again, for now, like I said, as long as it remains above this upside line, we will continue targeting the upside. But in terms of the downside here, like I said, even though this upside line breaks, this little territory for us will be somewhat of a neutral one. And like I said, to get more comfortable with further declines, ideally a drop below the 1.32 level would be needed. Okay, guys, I hope you found it useful. I do apologize for my voice going down a little bit in the end of this video, but I hope you got the message. And basically, if you want to join me later on at my Traders Tea Time, as always, that's 13:15 GMT. We'll have a look at some of these instruments, see how they've performed during the day, during the European session. And then, yeah, we'll take it from there, guys. But for now, I hope you have a wonderful trading day, and I'll see you later. Bye-bye.